All right, traders, let's jump into Tom's trade rules. Rule number 12, track every trade by strategy and their performance by strategy as well. It's critical to review your trades regularly and be consistent in your efforts to evaluate your performance and improve your trading process. So here's why I evaluate my trades, and then we'll take a look at my trading tracker as well. So number one, record keeping. A trading journal is going to provide you a comprehensive historical record of your activities, including entry, exit points, trade size, risk management, strategies, and outcomes. This information can be valuable for tax purposes, compliance, and reporting. However, creating a summary of the statistics for your trades, such as the total number of trades, your total profit or loss, your win-loss ratio, the average profit or loss per trade, the average return on capital, and the average days in trade can certainly help you improve your own trading, but you've got to be able to keep good detailed records. I'm also tracking my Greeks on a daily basis, so I want to know exactly where I am at any given point in time on my Greeks. So those are keys for me on the record keeping side. Another reason to track your trades is performance analysis. Keeping a detailed record of each trade allows you to analyze your performance over time. You can review the winning and losing trades. You can identify patterns. You can assess the effectiveness of your strategies. This analysis can help you refine your approach and make the necessary adjustments. Reviewing your performance for the week and the month and eventually the year and taking note of any patterns or trends that emerge is going to make a lot of difference in your trading. Once you're able to really step back and see how your trades are performing by strategy, you're going to have a good chance to improve and tweak your particular strategies. So you want to also consider factors like market conditions, trade results, and potentially more. So if there's something that you need to note, like, hey, this was a bad month because of X, when I look back at some of my trades, I'll realize, you know what, I had too many 0 DTE losers that month, and that's why my month wasn't as good as it was. Why is that important? Well, maybe I want to just 86 that strategy and get rid of that and move on to something else. So I want to make overall notes, and maybe it was the market. Market dropped 7% that month, 10% that month. Market ran up 7% that month. Tracking your accounts and looking at the performance analysis by strategy is going to be key for you. Also, you track these because of learning and improvement. By documenting the reasons behind each trade, you can gain insights on your decision-making process. Recording both successful and unsuccessful trades helps you learn from your mistakes and your successes, leading to continuous improvement in your trading strategies. So incorporate the lessons that you learn from these trades into your trading process and make a plan to improve your performance. I'm not saying that you should tweak your strategy every month or 2 months. However, once you start to see a pattern evolve, you definitely want to learn from those mistakes and improve your trading. So over time, traders identify certain patterns and setups that consistently lead to successful trades. Well, obviously, you want to do more of those and modify those patterns or setups that have led to unsuccessful trades. Having a journal is going to help you recognize these patterns more easily, enabling you to take advantage of the opportunities that align with your successful trading strategies. Now, accountability is another big factor. A trading journal holds you accountable for your decisions. It's in black and white. You can't just, oh, you know what, I shouldn't have made that trade. I've tried, won't do it again. If you put it on paper, it becomes real, and now you're holding yourself accountable. When you got to put the loss into your trading plan or into your spreadsheet, man, it really makes it a lot more impactful when you have to log it versus, okay, it's gone, it's no longer showing in your portfolio, and you don't pay any mind to it. So actually writing it down and putting a loss on paper is extremely important for your own accountability. Accountability here and tracking your trades encourages discipline, and it's going to discourage any impulsive or arbitrary trades. Those are going to stand out like a sore thumb on here when you look at the different trading strategies and realize, okay, that didn't fit in any of my trading strategies and I took a loss. Again, some kind of impulsive, arbitrary, emotional type of trade. Knowing that every trade is going to be recorded is going to deter you from taking unnecessary risks. Just like in business, if we're managing a team, we need to hold our team accountable. You need to be able to hold yourself accountable, and one way to do that is journal your trades. And when you understand, man, it's going to be recorded, I don't think I want to put on that particular trade. For me, one of the reasons that I publish all of my trades and I trade live in a Discord channel is it holds me accountable, because I know others are watching what I'm doing and potentially following what I'm doing, or are going to challenge me on certain trades. It absolutely holds me accountable, and it's going to deter me from making crazy trades that I really shouldn't be putting on. Okay. Goal tracking. Traders often have specific goals that they want to achieve, such as a certain percentage return or a consistent monthly income. For me, that's my goal, consistent monthly income. How do I track those goals against my actual results? Again, you've got to have some kind of a tracking mechanism. So a trading journal is going to allow you to track your progress towards these goals and make adjustments as needed. It's critical to be able to track your trades and look at your performance against your goals that you have set. Just like a sales manager would with a sales team, you've got to hold yourself accountable as for your own goals and achieving those targets that you set for yourself. If you're falling short, you're going to have to analyze what went wrong so that you can potentially fix it. Risk management. Risk management, recording the risk to reward ratio, stop loss placements, and position sizing for each trade is also going to help you better understand your risk management practices. This data is going to help you fine-tune your risk management strategies to protect your capital. When I'm recording a trade and I have, let's say, a 2x stop loss, when I record and I look back at my losses, was it a 200% loss, or was it 250, 300, 400? Was it only 50% loss? Did I hold true to my risk management plan? Did I follow through and size correctly? You can look on paper and it's going to stand out like a sore thumb that, that was way too big a size or way too big of a loss that I allowed to take, which was outside my normal parameters. Hold yourself accountable. The more you do this, the more accountable you become, and the easier you are to being able to manage your particular risk. So in summary, a trading journal is an essential tool for traders to enhance their skills, improve your decision-making, and maintain discipline. Having this toolkit is going to act as a repository of valuable information that can be used to refine your strategies, help manage your emotions, and ultimately become a more successful and consistent trader. So make this part of your trading today. Now, I'm going to take 2 seconds here, maybe a little bit more, just to show you my particular trading journal and what I'm doing. So when I'm looking at my main account here, I'm tracking all of my trades and I'm tracking all of my exits here. So if I look down on these particular trades that I might have, I'm tracking the open date. I'm tracking what type of transaction it was. I'm tracking the ticker that I used, the expiration date, the type of trade, the strikes, the opening price, whether it be a debit or a credit, the closing price, what was my net gain or loss, what quantity did I use, how many DTE did I use in this particular trade, what was my overall cost on this particular trade, okay, and what was my margin that I used on that particular trade, when did I close it, what was the overall P&L, how many days in trade did I have, what was my win or loss on that trade, and then any premium capture and percent return on capital. And then I put some notes over here as specific trade types so I can easily sort. That's what I'm looking for on a daily basis as I manage through my trades, and I can see how many trades I've actually won and how many trades I've actually lost. In fact, I also color code, and I color coded this wrong. Okay, I also color code to gains and losses on here so that I can better track and easily visualize where I had some gains and some potential losses. So it's a good area. So you can see these were and some spec trades that I have. If I take a look at some of those trades to see, well, what happened on some of these spec trades. Again, these should be coded red. I can see whether I'm having a good month or a bad month on that. Right now, I'm up $1,200 this month on spec trades in August. Okay, is that good or bad? What type of spec trades were they? Yeah, I can see that most of my losses are hedges. Okay, some hedges win, but most hedges lose, which is totally fine. I'm not too worried about it. I've actually made some gains on some 0 DTE trades and a few other spec trades in here that have offset my particular gains or losses. In fact, this is another 0 DTE. So it's good to go back and take a look at some of these. I can see exactly what I've done on these, but I'm okay losing money on hedges. Okay, they're within my parameters. That's all good. If I'm looking at long-term 1-1-2 trades, I can go every single month and I can look at my wins and losses. Obviously, these are pretty good wins and losses in here, but what's working, what's not? Also, what's my average days in trade on these? Even though I'm putting them on about 120 days, I'm actually able to get out of most of the naked puts around 86 days left in trade. So it takes me about 40 days in order to close naked puts in most cases. Valuable information depending on what I want to do, so that when I'm looking at maybe on my put debit spreads that I'm putting on, I leave these on obviously till expiration. And so I can see that I'm closing my naked puts at around 86. The rest of the trade goes 122, but maybe I want to put debit spreads at 85 days out and naked puts at 120 because I want to have them expire at the same rough time. I'm not doing that, but those are the types of things that you can take a look at when you're doing this. And then I'm also tracking daily trades. Okay, and I'm tracking overall month returns in here. Okay, you can see for the month of July. Okay, on the last day of July, okay, I had my deltas were negative 28, which was well within my parameters. My theta 703, a little light. What was my net lick? What was my buying power? What was my buying power percentage? What was my daily realized gain or loss on that particular day? But then at the end of each month, I'm also tracking what was my realized gain. So I had a 19,790 as realized gains that particular month, which was a 7.1% return. My goal is 3%. Okay, I was also up roughly 3%, 2.67%, 2.7% on my net lick for the month. I pay less attention to net lick than I do realized, but my goal on these realized is every week I'm moving towards my goal. And right now for this particular month, I'm up $5,327, which is 1.86%. Now my goal is 3%. 1.86 by the 18th day of the month puts me right on track. If I'm looking at 0.1% a day, roughly, by 30 days, you should have 3%. So by 18 days, I'm at 1.86%. I'm right on track of where I need to be. So I track overall numbers here. I track individual trades here. And then I also have a tab for each trading strategy so I can see exactly how those trades are doing. And I can go back weeks and months here and see what my overall gains and losses are each particular month. All right, so again, having this trade strategy of tracking your trades is an essential tool for any trader. Rule number 12, track every trade by strategy. All right, you guys have a great rest of your day, and stay tuned for more trade rules to come. Thank you.